If you had invested just $10,000 in Zoom when it went public, which was a little over a year ago, you would have made over $74,000. And that's just in a single year. Imagine if you have invested $20,000 or $30,000. You could have purchased a house without a mortgage. The stock price has been all over the roof since the pandemic took place. But Zoom wasn't the only stock that gained so much from the pandemic, but pretty much every other company. However, now is probably the worst time to invest because the bubble is at its peak. The country is in a recession, but the Fed can't stop printing money, and that's the only reason why everything hasn't crashed yet. How big is that crash going to be? Nobody knows. When exactly will it happen? Nobody knows. But things will get messy to a certain extent. And you don't want to sit aside and just watch how everyone is getting wealthier. So let's find out the 5 stocks that are going to survive the next crash and will be sold at a huge discount and will double or triple in the next few years. Hi proactive thinkers, before we move on, if you want to learn how to analyze companies like professional investors and find out if a certain company is a good investment or not, you have to take this course by Skillshare because it will teach you everything a professional investor uses to value a company. And it's taught by Business Casual, the YouTube channel you probably know. I've taken the course, it's short, animated, and worth your time. Skillshare is an online learning community for creatives where millions come together to take the next step in their creative journey. Skillshare offers thousands of inspiring classes for creative and curious people on topics including illustration, design, photography, video, freelancing, and more. And all that is for less than $10 a month with annual subscription. But because you guys are the best audience in the entire YouTube, the first 1,000 of you to click the link in the description will get a 2-month free trial of premium membership, so you can explore your creativity. By the way, you will be supporting the channel by signing out to Skillshare. And now let's get back to the video. The first stock is VTI. It's a Vanguard ETF that primarily focuses on tech companies. It's one of the ETFs that I personally invest in and would gladly suggest it to anyone else. When you buy a single VTI stock, you're literally buying a small portion of 3,500 other US stocks because it invests in small, mid and large cap companies. Its biggest sector is technology. Tech companies make up over 21% of their entire portfolio, with Microsoft, Apple, Amazon, and Google making up the majority. Technology is the future because in this field, innovation is endless. Whenever we think that we have reached the peak, tech companies surprise us with another revolutionary product or a service. Just think about how different life was just 10 years ago. So as long as tech keeps growing, this stock will definitely rise. In the last crash back in March, it lost 35% of its value in a single month, but it quickly recovered since tech companies have surged. Of course, returns aren't super high like some tech stocks, but it's a super safe investment with huge potential. Since its inception in 2001, its average return was 7.12%, but when the market is down and if you buy it at a discount, you can sleep well and be confident that your money is both safe and you will make a decent return on your investment. But for those who are a little more aggressive and want a much higher return, Facebook. It's one of the best options you've got. Before you write down a negative comment saying you don't understand anything about the stock market, Facebook has reached its full potential and it's not going to grow like it used to. Please give me a moment to explain my point. I wouldn't say I like Facebook, but its number of active users has been increasing every year by an average of 28%, even in 2019. And as the number of internet users keeps growing, there is no reason why Facebook number of users won't be growing as well, especially since it's a monopoly. It owns Instagram that already has over 1 billion users and it's growing tremendously. Since Facebook has a total number of 2.7 billion users, they're all potential Instagram users. On top of that, Facebook is preparing its version of TikTok, which will be called Instagram Reels. With all the scrutiny that TikTok is going through, Facebook is in the best position to replace it. United States isn't the only place where TikTok might be banned completely, but also India, where it's already banned and might get banned in the EU as well. It's one of the companies that will definitely join the $1 trillion club. It's just a matter of time. So when the market crashes again, it's one of the stocks I will be watching carefully. However, it's not the only company that might join the $1 trillion club soon, because Visa is on the rise as well. Of course, Visa doesn't sound as cool as Tesla, and there isn't any hype around it. But this company provides an essential service that will keep expanding year after year. The war on cash started back in 1990s when the internet companies took off. It's not going to end until cash either completely disappears or make up a small percentage of the market. Throughout centuries, we have moved from barter to commodities to gold and finally to paper money. And now it's time to move to digital currencies. Some countries have completely moved to digital money already, others are still lagging behind, but the trend is definitely heading to cashless society. And the leading company in this industry is Visa. And guess what? The pandemic is only going to accelerate this growth, because social distancing is the new reality. Currently, the company is valued at a little over $400 billion. And many experts expect the company to hit a $1 trillion valuation in the next 2 to 3 years. It's one of the few companies that I think is not overvalued now, but if the market crashes, Visa will most likely lose a significant chunk of its value as well, which makes it a perfect opportunity. But it's time to move to the next stock on this list. It might sound a bit controversial because it's the stock that's impossible to predict. Yes, I am talking about Tesla. Elon Musk managed to wipe the floor with Wall Street. Wall Street was confident that Tesla shares are going to fall, so they shorted the stock. If you don't know what's shorting, we have explained that in a previous video, the link will be in the description. The risk with shorting is that as the stock keeps rising, investors keep losing money. At some point, the stock simply skyrocketed to the point where investors thought if they aren't going to exit their position, they might go as well bankrupt, and purchase Tesla stock, which made the stock rise even farther. Tesla is no longer the startup that's hardly trying to survive. It's the most valuable automaker in the world, and it's already profitable. Of course, paying $1,500 for a single Tesla stock is insane now. It has a forward PE ratio of 137, which gives it a tiny room for growth. But if it falls significantly, then it's one of the stocks that's worth buying if you intend to invest long term. And finally, my favorite company, Apple. It's the company that knows how to build great products, charge a premium, and still manage to sell a ton of them. However, what probably separates it from the rest of the world is that they have built an ecosystem that's super difficult to leave if you get into it. And it all starts with a single product. Once you get an iPhone, you realize the need for AirPods. Since you already have an iPhone and AirPods, it makes sense to replace your computer with a Mac or iPad. I've seen rumors that the company is working on the next big thing, Apple Glasses. However, Apple is more focused on expanding its services. Last year, Apple's services segment posted a revenue of $46.3 billion. And it will keep rising as the company is now focused on building its Apple Arcade, Apple TV, and so on. The company is safe in the long run and will keep growing. Keep your eyes on the stock, especially when the market crashes again. And if you want to analyze stocks like professional investors, then don't forget to check out our sponsor, Skillshare. The link is going to be in the description. Other than that, I hope you guys have enjoyed this video, and if you're new around here, make sure to hit the subscribe button and the bell besides it. Thanks for watching, and until next time.